We will now move into our next segment, which will be a town hall on Kaleidoscope of Tech Realms. The chair of this session will be Rajan Anandan, Managing Director, Sequoia Capital. Rajan will be in conversation with three founders who continue to contribute hugely towards the transformation of the Indian product landscape and startup ecosystem. Joining Rajan will be Girish Mathrubootham, CEO and founder of Freshworks, Mukesh Bansal, co-founder CureFit and President Tata Digital, and Sucheta Salwan, founder Little Black Book. Rajan is currently Managing Director at Sequoia Capital India. In his current role, he is responsible for developing Surge, a rapid scale-up program for startups in India and Southeast Asia, into the world's top scale-up program for startups by acting as an investment advisor and mentor to the program's founders. Prior to joining Sequoia, he was a Managing Director at Google India and Southeast Asia. Rajan's deep understanding of technology, significant operating expertise, and track record of growing tech businesses across the region will help scale the session on building transformation businesses of tomorrow. Over to you, Rajan. Let's get the conversation going.
Thank you, Shreya. Hi, everyone. I'm delighted to host the first industry session at the NASSCOM Technology and Leadership Forum. This session is a reflection of how the industry has changed and how important startups and innovation are to India and the theme of shaping the decade. 2021 has been a phenomenal year for the Indian startup ecosystem, and 2022 has started on a very interesting note. In this segment, I have the pleasure of hosting three founders who have traversed different paths, are role model entrepreneurs for the ecosystem, and have insights that all of you would love to hear. Let me welcome Girish Mathrubootham, the CEO and founder of Freshworks. I don't really need to introduce Girish, but since we have an audience that is global, and there may be some of you that may not know Girish, so let me take a minute to introduce Girish. So thank you, first of all, Girish, for joining us from California. As most of you know, Girish has been a true pioneer of the Indian SaaS ecosystem. Freshworks today is the flag bearer for Indian SaaS companies that are winning across the world. He founded the company in 2010, built the fastest growing SaaS company from India ever. I think, Girish, you guys probably still have that record, and took the company public in late 2021. The entire nation was proud to see Girish and his team carrying the Indian flag at NASDAQ. Freshworks has blazed the trail on so many fronts. We will get into all of that. But that's really not what Girish, that's not the only thing that Girish is about. Apart from leading Freshworks, Girish has been deeply invested in building the SaaS ecosystem through SaaS Boomi, the Together Fund that he'll talk about, and countless other contributions. So welcome, Girish. So Girish, I wanted to start by getting your views on the Indian SaaS ecosystem. You have been at the forefront of the Indian SaaS wave that has shaped and have been really integral to shaping this incredible movement. In many ways, we have come a long way, but as you know, Girish, in every sense, it's still day one for Indian SaaS. Indian SaaS companies today account for about 2% of global SaaS revenues, right? Global SaaS industry is about $150 billion of revenue. Indian SaaS companies collectively account for a little over $3 billion. Now, as you look at the next 5 years, Girish, what excites you the most? But also, what worries you about the Indian SaaS ecosystem?
Hi, Rajan. First of all, thank you for having me here, and good evening. So I think, India as a product nation has always been our collective dream. I think both you and I have been on this journey for several years, along with a bunch of our folks in the ecosystem. I think what excites me is the long-term story for India SaaS is a very durable one. So we have been, let's say, optimists or early believers in 2014, 15, hoping that, hey, we will have a lot of Indian companies that are going to go public and build long-lasting companies and so on. But I think it's time that our dream is actually starting to shape up, and I can't be more excited about that. And I think the McKinsey report that was probably published maybe a year ago, I think, was a fantastic one on showcasing how many Indian SaaS startups we can expect. And like they identified 450 different categories in which we can expect SaaS companies to come in. And I think it's all playing out now over the next few years. And you're absolutely right, as we are seeing with Together Fund also. For those of you who don't know, Together is an $85 million seed fund focused on finding and helping global SaaS startups from India. So what we are seeing is new categories emerge, like revenue acceleration plays, new verticals focused on PLG companies, like CRM for product-led growth companies, and so on and so forth. We're also seeing very interesting plays in developer tools, like India is seeing an explosion of developer tools coming from Indian startups. We are seeing some early traction, but very exciting traction on Web3 and crypto. So I think it's fair to say that this is going to be our decade for India as a product nation. There are challenges, like in any other industry. I would say in 2010, my challenge when I was starting Freshworks in Chennai was, hey, we didn't have a good office space for India. I think we have come a long way. Today, the challenges are more along. I would say the number one challenge for us is, hey, for all startups and for us as an ecosystem is, hey, do we have enough experienced talent that all of our startups can quickly ramp up and scale, right? So we all know that India has a lot of youngsters and qualified engineers, but are they ready, and will we have enough on time? I think that is the biggest challenge, but that's a growth problem. Like we always used to say, a growth problem is always a good problem to have, and I'm an optimist and a believer. So super excited for this long-term story that's playing out for India SaaS.
Got it. Great. Thanks, Girish. No, can't agree with you more that SaaS is really broad-based, Girish. Our most recent surge cohort, right, is which is our sixth cohort, Girish. 60% of our companies are B2B software companies that are building for the world from day zero. And interestingly, we have 4 cybersecurity companies for the very first time. 3 from India and one from Southeast Asia. So as you said, developer tools, vertical SaaS, cybersecurity, sales tech, martech. I mean, now I think it's very broad based, which is super exciting to see. Now, I want to now move to the journey of Freshworks, Girish. You led the company through this meteoric growth phase from founding to IPO. In many ways, your team, you and your team, Girish, have had textbook execution in so many areas, right? I wanted to, get your thoughts on 2 specific questions. The first one is, look, you picked red oceans to compete in, right? You went after, let's say, help desk to start with Freshdesk. That was a very competitive space. Then you went after all the other spaces you've gone after have been red oceans, as opposed to blue oceans, where you have many competitors, which is counterintuitive, right? And still you guys have been wildly successful. Tell us how you thought about this particular strategy of going after sort of red ocean segments.
Yeah, before I talk about the strategy, Rajan, let me comment on the textbook execution front, because I'm sure there are many founders watching. So from the outside, it may look like textbook execution, but all founders need to know that from the inside, the kitchen is always messy, right? So it's fine, it's okay. So you don't, nobody has textbook execution from the inside. So we make our share of mistakes, and you just have to have enough calls, right, to be able to live to tell the story one day, right? So that's something I want to tell all the founders, that don't get fooled by the textbook execution from the outside, right? So, but on the strategy, on the red ocean strategy, you're absolutely right, Rajan. And see, our red ocean strategy was a conscious one. And before your current role at Surge, you were head of Google India, so you know what we did exactly well. So when we are targeting global markets, we picked, and when we are sitting in India, right, and we are not hiring sales teams around the world in the early days, so we needed to compete in established, mature markets as a conscious strategy because of the search volumes. So we were completely relying on online acquisition of customers, making sure the products were super easy to try and buy with credit card, monthly payments, because we were going on, we saw an opening in the market. So, and what we used to say is most companies, enterprise software companies, build for the Fortune 500, we build for the Fortune 5 million, right? So that is the opening that we saw. There is a long tail of the global SMB, and we saw a fresh approach like how can we have product-led growth, low cost, low touch sales model, and relying on Google and other online acquisition channels to bring customers to the website and then letting them try and making sure the products are simple, easy to understand and use. So I think, and once we were winning in Fresh Desk, our help desk product, we were able to replicate this in other categories. So I think our initial strategy of going after Red Ocean, which is still our strategy today, was a very conscious one. The simple one-line answer is we are relying on search volumes, which is the core to our customer acquisition.
Got it. No, that makes a lot of sense. Now moving to revenue, Freshworks scaled revenue very quickly. Tell us the 2 or 3 most important things to scale revenue as fast as you all did, Girish.
Yeah, I think the first thing I'll tell you on our maybe some past data that I could give you on revenue growth itself. It took us 18 months to go from 0 to 1 million. And from 1 million to 100 million, we were able to do it in 5 years and 2 months.
There you go.
Yeah, and then the 100 to 200 happened in the next 18 months. So I think what's important to understand first is it's okay if the first million takes time. So you have to be patient to make sure that.
But Girish, 18 months is still pretty quick, even today.
Yeah. Yeah. Also, in the 18 months, I think 9 months were spent on building the product. So
exactly. So launch to 1 million was 9 months.
I think launch to 1 million was 18 months. Sorry.
18. Okay.
Yeah. So, it is quick when you, again, it depends on who you're comparing with. There are companies who probably do it faster, but on an average, we have seen more deals. So it's okay to be patient. So I think the key is first to be patient and get product market fit and make sure that your product is actually loved by one cohort of customers who can talk about it. So that's very important to get right in the early years. So our go-to-market, if I were to break it down, right? So our first aspect of our go-to-market was predominantly inbound and product-led growth. So, and we didn't do anything else. Like, in fact, in 2000, we launched the product in 2011, and only in 2012, we hired our first salesperson, right? And the month and this was an inside salesperson in Chennai, and our revenue doubled in that month. And all he did was like send an email to everybody who signed up saying, I'm available here to talk and available to buy. So I think the product-led growth with easy to try, easy to buy, this is what we started with, an inbound motion, and it attracted a lot of SMB customers globally. But we also found that teams within larger companies were coming inbound, finding us on Google and starting to try and buy our software. So we were closing companies like Burger King and 3M and Schneider Electric, teams, departments within those companies from Chennai. And that gave us the confidence that, hey, why don't we actually, our product is working for these larger companies. So why don't we augment our inbound motion with a sales-led outbound motion? So that is something we started in 2015, 16, where we really scaled our outbound engine. So today, that is contributing like more than 50% of our revenue, which is customers in the mid-market segment, what we call as like 250 to 1,000 and beyond employee companies, right? So the third aspect, we also layered on a partner channel over, like, especially in non-English speaking countries. So we started building a partner network. And today we have, I think, several hundred partners across the globe who actually sell our software. They also contribute a meaningful chunk of revenue. So I think it's there's no rocket science. And you are a GTM leader, Rajan, and you know this pretty well. So I think you start somewhere. Like in our case, we started with inbound product-led growth, and then we layer on the other channels, and the market is big. We can keep going.
Got it. And at what scale, Girish, did you go down the partner? You layered in the partnership-based approach?
So I think we started our partner program in 2013, but in the early days, most startups should know that there is no pull from the partners, right? So nobody's jumping up and down to sell your software. You have to build relationships and try to get them to make those initial investments and commitments because it's a long run. But once, as your brand name evolves, as they start hearing it from their customers, then more partners want to come in. So we did not have any inbound from partners or reseller partners in 2013, 14, but then from 15, 16 onwards, like we started getting a lot of inbound saying, hey, we want to be your partner, right? So I think it's important to invest in weight, and the early movers, actually, you have to win over with the founder storytelling and the long-term vision, because partners in Europe have to spend considerable money to like have people selling your product, right? So it's and in SaaS, it's also like a monthly revenue. So they have to pay somebody $100,000, but they'll be getting, each customer will pay like $500 a month or $4,000 a month. So it's a lot of investment and commitment from the partners.
Yeah, I think this is an important point, right? A lot of early stage companies especially don't realize that at the early days, you have to really go out and sell. Others won't sell for you. The last question I have on Freshworks specifically, Girish, is as the company grew in size and complexity, how have you retained the culture? I mean, a lot of our audiences, that we have a lot of startups, but we also have larger companies that are trying to get more agile, more nimble. So tell us, how have you retained your culture? The 2 or 3, Girish tricks.
No, I think the only thing that stays constant for employees is the purpose, values, and culture. So our strategies have changed over the years. As I told you, so many things have changed. So many people have changed. So I think since day one, the purpose for Freshworks has been, hey, let's make business software for the rest of us. We are not building for the Fortune 500, as I said. So we're building for the Fortune 5 million. So we actually believe that we make software that people actually love to use. So that's been the mission. And combine that fact with, hey, we want to build the most iconic software product company from India. And that's the rallying cry. And I think over the years, we have been able to keep the culture intact, and culture manages people. So
that's great, by the way. So does that mean you'll never sell to the Fortune 500? You'll never?
No, I think we are getting pulled up into that. So the Fortune. So we have Fortune 500 clients. We don't have an enterprise sales motion. So as I told you, teams from larger companies come and buy our product, and then other teams start using it. So we are being pulled up. We are not going up market per se, especially in the large enterprise.
Got it. Terrific. So Girish, let's shift to, you obviously went public in late 2021. So, as you made the transition from being a private company to a public company, what has changed? And maybe as you're talking about that, the US public tech stocks have obviously seen a major correction, not, Zoom and every other company that we know, including Freshworks, obviously. And also maybe talk a little bit about that. How has that impacted the company, or has it not? But maybe mostly you start with, what's the change? I mean, how does it change?
Yeah, I think in my mind, I have a very simple analogy. And as a VC-funded private company, I think that's the equivalent of being a bachelor who is partying hard and having fun. And VC money is very forgiving, as you and I both know. And being public is actually like becoming more responsible and starting a family. But that's the end game, and that's the more purposeful game, right? So I think every bachelor someday would like to settle down and start a family. Every VC-funded company someday has to eventually go public and start building a mission-driven company. I think that's the change, what I would say. And on this correction itself, right? I think, we are in this for the long game, the way we look at it. So again, another analogy here is, okay, this is like you have a house, and every day morning, do you want to wake up and look at what's the value of my home, right? That's not what you do when you have a home. But that's what is happening in the public market. So they put a price on your stock on a daily basis. So, but I think the way we look at it, and it is an important conversation to have with employees also, that look at zoom out and look at the longer picture. You cannot control what the market does, right? But we are well capitalized. We raised $1 billion in the IPO. We have more than that in the bank. We have 3 big opportunities. We are operating in the customer service space, the IT service management space, and the CRM, broader CRM market. We have an amazing team and great products that customers still love. So it's time to focus on what we can control, which is continue executing, continue growing the company. The markets can be down now. Basically, the easiest way to think of market is a multiple. Okay, in a bull market, maybe you're talking 25, 30, 40x multiple. Maybe in a bear market, you're talking about 5, 6, 7, 8, whatever. So don't worry about that. So focus on the execution. Eventually, things will work out. So that is the message for the employees, for all stakeholders, is we focus on what we can control, and we think we have a great opportunity.
Great. I think that's great advice, Girish. Just focus on the long game, focus on the purpose, and keep building. Right. Okay. Let's. We are coming to the end of our chat, Girish. This will be the decade for Indian startups, as we've talked about. What advice can you give founders on what it takes to build an enduring company? Right. I mean, you're clearly on your path. As you say, your work's never going to be done, but you're clearly well on your path to building a truly enduring company. What advice would you give founders, Girish?
So I recently came upon this quote from a Tamil writer called Balakumaran, which resonated really well for me in the context of founders. So I'm going to give that as the advice, which I think is very relevant when I thought there's so much to that. So he said, see, intelligence is not about education, right? It's not about communication or language skills. A lot of times we tend to value people who can speak English well, right? Especially in India. So intelligence is not about getting a PhD in maths. It's not about, or even the ability to make money, right? So if you are rich, doesn't mean you're intelligent, right? So real intelligence is about having the ability to observe people keenly and understand their characteristics, their strengths, and how can you use that, and meaning in terms of helping them win. I think that is how founders can win, in my opinion. And I can speak from experience. So I'm not a rock star coder or an awesome product manager or any of that, right? So I think this message resonated to me because I think if I look back on Freshworks and what I have done, I think I have had the ability to understand what motivates people and bring the right people to the job and actually help them grow their careers, even for someone who started as a fresher still with Freshworks. So we have seen them blossom and grow. I think this quote was very profound in terms of what founders need to win. How can you observe people and understand what makes them tick and unlock their potential?
Terrific! What a great way to end. I think that is absolutely awesome advice. You always have these fantastic ideas and nuggets of advice, Girish. Girish, thanks again for joining us. And more importantly, I think thank you for building an amazing company and for being who you are in helping us build this ecosystem. So let's say thank you to Girish. Okay, it's my great pleasure now to invite Mukesh Bansal. If you're in the internet ecosystem in India, there's no question at all that you've heard of Mukesh. Many of you probably already know Mukesh. But since this is a broader audience, including a global audience, let me take a minute to introduce Mukesh. So Mukesh Bansal is a serial entrepreneur. He's been in the internet space for several decades now. It doesn't look like he will be if you look at him, but he has been. Mukesh graduated from IIT in 97, then actually spent almost a decade in the US, working in Silicon Valley for many years, where he was inspired to do something back in India. He'll talk about that. He founded a company called Myntra, which until today is the largest fashion-focused e-commerce company in India. He started that company in 2007, and then in 2014, Myntra was acquired by Flipkart, at the time one of the sort of the most interesting acquisitions, arguably, that was made actually in the history of the internet, because then Myntra went on to become a very even larger business in Flipkart. Mukesh actually went with the acquisition to Flipkart, spent a couple of more years there. Then in 2016, Mukesh actually left Flipkart, and then started up another company called CureFit, which, if you're into fitness, or you think you want to get into fitness, or maybe you dream about fitness, you've probably heard of CureFit. You couldn't have. And actually, this, I think, a couple of days ago announced that they bought Goals Gyms and now has a very large market share in the fitness space in India. So now he's been building CureFit now for 5-6 years, and actually in 2021 he took on another super interesting role to be the president of Tata Digital. So we have somebody here with us who's been a serial entrepreneur, who started several companies, exited one major exit, but now is also not just building his own company, but also involved in, without question, the most admired large conglomerate group in India. So Mukesh, we are thrilled to have you here. Mukesh, I'm going to start with the first question. Obviously, you've seen the internet from the very early days. 2007 when you started Myntra, all the way, I think at the time I was just checking, Mukesh, there were 50 million internet users in India. Today we have 650 million internet users. E-commerce was virtually non-existent. Now e-commerce is huge. So, maybe you can start off by telling us a little bit about what have you learned about building internet businesses in India? What does it take to be successful?
Thanks, Rajan. Very excited to be on this forum, and thank you for a very kind introduction. I think you have pretty much covered what I could say. So I think I don't know what else I'll be able to add, but I'll try. I think, you are right. When I moved back to India, internet size was really small, and that translated into a lot of struggle early on. It's difficult to sell, people stuff online when they're A, not online, B, don't have credit card or any kind of internet banking, C, there is nobody to pick up the product and ship it. So that's quite difficult and result into a lot of different pivots, etc. I think the internet user base has grown dramatically, but one of the key thing I have learned is, despite the size of the internet, the spending power, unfortunately, is still, concentrated among top, 10 million or so households. And if you apply Pareto, nearly probably 80% of all GMV at this product and service commerce comes from that. So I think that's the next big challenge. As we are looking to massive unlock of India, the kind of real India internet opportunity in the coming decade, I think the growth of that 10 million households to 40, 50 million households who have real spending power, everybody in those 500 million users are part of digital life, but they are mostly consuming content at a very, very, cheap bandwidth, but really not buying anything beyond that in terms of meaningful addition GMV. So that's really, key realization. Despite, India being a large country, I think we have some ways to go to truly unlock the digital potential, which also in some ways is, quite exciting. Something we can look forward to. Looking at is total size of online product and service commerce in India is $75 billion today. So Rajan, everything you have been a part of, last decade or more have added up to that. But in the coming decade, it will go to over $500 billion. So we have, 6 times as much market creation ahead of us, right? That's a very exciting thing to look forward to.
No, absolutely. So you're saying product and services digital commerce is 75 billion. And that will go to 500 billion over the next 5-6 years, right?
Yeah,
that's
absolutely.
Mukesh? Okay.
That's right.
Okay, so I wanted to double click a little bit about what you said, which is 80% of the current GMV in e-commerce is in the top 10 million households, right? That's very interesting because at 4 or 5 people per household, you're talking about 40-50 million consumers, right? Transacting consumers that are driving almost entirely the e-commerce market. So what do you think it will take, Mukesh, to unlock the next, 30-40 million households? What is it going to take?
Yeah, see, the lifestyle, average income of those households, products and brands they consume, they're all very different. If I take Myntra example, right? Myntra ASP, if I'm not mistaken, is maybe about 800 rupees. But, next, 20-30 million households, they don't buy 800 rupee average ASP product. That's not their lifestyle. Their lifestyle is more, 200-300 rupee product. So I think what it'll really take is from the supplier point of view, whether you look at, for every category, brands, products that they're building, they really need to completely rethink in those price points, which are really relevant. These consumers are good news is they're already on the internet. They're also, enabled from digital payment infrastructure point of view. They know how to transact online. Supply chain infrastructure is really robust. So, and some of the, commerce companies like Meesho's and Dealshare, etc., which have, seen traction, even Flipkart last, few years by folks on tier 3, 4, a lot of it is on the back of, unlocking those price points. So that's really, I think, I feel is the critical need. And I think somewhere, all the interest in D2C also is coming from there because there's huge brand creation opportunity in all those price points. Those segments have by and large been mostly unbranded in most categories. I think efficiencies of the informal distribution through Kirana store, etc., is still a lot more economical. So you have to really, both from brand's point of view, product point of view, and the supply chain point of view. And so we almost need to rethink, the solution for this top 10 million household is not going to work for next 50 million households.
Got it. No, I think, so it sounds like, so maybe you can, let's just keep going down the e-commerce path a little bit. So Meesho, you mentioned Meesho, Dealshare, companies like that. So, what's your view? I mean, I guess, do you think that those models can really build an economic engine over a period of time? Because, as you know, I mean, 200-300 rupees to make money. I mean, eventually all businesses, Mukesh, must make money. So, how do you see these businesses making money at those kinds of price points, maybe not in the next 3-4 years, but at least, by the end of the decade, Mukesh?
I think that's a much bigger question, Rajan. I think it's not only for these guys, but if you look at even the people who are selling through those 10 million households, it's not like
that's right.
Cash flow engine,
your former colleagues.
Yeah, I've been as much guilty as anyone else.
So will e-commerce ever make money? You think will e-commerce in the next decade make money in India?
Yeah, I think the people will make money. It will be in segments, right? From to the best of my knowledge, Myntra is nearly EBITDA positive now, not necessarily generating a lot of cash. So it may be category to category. Private labels.
Actually, Nykaa is break-even business, right? They make a little bit of profit. Yeah.
So it's a category answer. It's a private label answer. Things like additional monetization using ads, financial services, etc. Those are the answer. Core, hardcore retail, especially in the competitive situation we are in. Potentially 4 very large player, all very well capitalized. Size of the price, we talked of 75.
Who are the 4? So you got Amazon, Flipkart, Meesho.
No, I meant from horizontal point of view. Yes, Meesho is also there. Maybe probably, but I was talking about more, what Tata's are doing and Reliance is doing. Right?
That's right.
So,
that's right. There are 2 more players here. One of whom you're a part of.
Or had in the ring as well.
Right. Of course.
We'll talk about that. But so I think with that, the core retail, just pure trading. I think, and if you look at service commerce also, whether ride sharing or food delivery, again low AOV issue. I think the key question for all these players is, yes, you've got all the transactions, you're accumulating huge amount of data. Some of these platforms are absolutely sticky. Where can you make like Amazon in the past also, right? They never really made money from the core retail, but they channeled that into something else, which is guzzling a lot of cash for them now. So what is the equivalent of that for Indian player? I think, Rajan, that's unsolved. People have some hypothesis, but I am not. At least, while look, the category is still growing 30-35% CAGR, right? And some categories even more. So at that, the just sheer growth itself is something which can warrant additional investment, and the pressure on producing profit is not there. But I still don't. I think the profit contribution from core retailing will be very low compared to all the other ancillary stuff you can build on top of that.
Correct. Like things like ads and financial services and all of that, right? I mean, it's amazing, Mukesh. We have several companies in the Sequoia portfolio and the Search portfolio even that are D2C brands that are growing very, very rapidly, that are insanely profitable.
Right.
We had a company go from 0 to 100 crores of revenue, a D2C brand in the beauty space, with 30% PAT. Positive 30, which is like crazy. Who would have ever imagined? So, as you said, okay, let's shift gears to Tata. I mean, obviously, Mukesh, we're all very excited that you're now working with the Tata team. Tata seems to have a very bold vision for the group when it comes to digital businesses. We know of the many acquisitions that have been made, and we've also heard snippets of the super app. So I know there's only so much you can share with us, but what's the grand plan here with the Tatas?
See, the genesis of this whole effort is the fact, which may not necessarily well known, is the Tata Group already has phenomenal consumer presence, starting with the brand itself. I mean, if there is one brand consumers of India trust over generations, is obviously Tata, right? On top of that, if you look at any category, fashion and lifestyle, Titan, Tanishq, Westside, Zara, very, marquee brands, right? Chroma in electronics, Taj group of hotels, and now 3 airlines, which are part of the group, nearly 30-35% market share of airline industry. Tata Sky is the number 1 D2H player in the country. 3 very strong digital assets in big basket category leader. 1MG, number 2 player in the space, Tata Click, differentiated fashion play, and so on. So we have a lot of these assets and huge number of consumers who overlap significantly with pretty much all the people who spend money online in the country. So the group has a brand, relationship, and deep category expertise across much broader spectrum of category. And that is where, gives us the right to play. The whole endeavor of Tata Digital is how do we bring these assets together and stitch a unified value proposition. I think the coming months and quarters, we'll go public with how we're thinking about it. And hopefully, we'll have something very exciting to share. But like everything else, it's going to be long-term journey and evolve, year to year.
Yeah. Play the long game, as the Tatas have done for a very long time. No, that's
Right.
great. Hey, so just staying with the Tatas, in the audience, Mukesh, we have obviously a large number of entrepreneurs, but we also have, executives from large companies, right? And every large company is trying to become more innovative. And it'd be interesting now that you've been working with the Tatas for, not a very long time, a short period of time. Maybe share your thoughts of what does it take for a large company to sort of work with somebody like you, for instance, acquire so many, founders. I mean, all of these companies, whether it's 1MG and many others, are run by founders, right? So maybe just give a few snippets that might be helpful for all the large company executives and CEOs who might be listening to this.
I think before, I come to, what it takes to, let's say, be innovative or competitive in digital space, I think we need to also acknowledge how innovative the group has been in general. If you look at the group's track record over the last 5-6 years, is quite phenomenal in terms of, new business creation, overall just growth of the group, how dominantly situated and how massively profitable, group is and so on. So I think a lot of this, you talk about long-term mindset for innovation versus, hustle innovation that maybe, our side of the, game knows better to do. I think there are different way of looking at innovation, right? I think there's a lot of exciting cutting edge work is happening in the group. The group leads, I think nearly, if I'm not mistaken, 70% market share of EV in India, right? So that's quite pioneering and innovative, right? But I think the way we are setting up our digital thinking, how do we, use best of both worlds? So we have, our team members from the Tata Group who understand scale, who understand, building profitable business and so on. And number of people who have been, like me, who've been part of digital ecosystem. And it's a fairly independent setup. I think the way organization set up and our culture is not that different. If you find in any large scale digital startup, it's a lot of autonomy, independence, freedom to experiment and fail. And that way, I in many ways, I feel right at home and simultaneously opportunity to learn from some of the things, which really work at very large scale, and also a lot of awareness about building sustainable businesses.
Terrific. No, it's I think it's very, very exciting group, and as you said, it's been so successful for so many years across so many things, right? Okay, last two questions, Mukesh. Mukesh, as you look at the internet ecosystem, obviously you're very excited about fitness. You're in CureFit, but outside of fitness, what are the two, and outside of fitness and e-commerce, what are the one or two sectors as you look at the next decade that you're very excited about?
You touched upon this, the entire D2C brands, and I don't know whether it's D2, I would just call consumer brands. India is still by and large unbranded in many categories, let's say outside electronics and some FMCG categories. So emergence of these brands across all these categories is going to be a defining trend of 2020s. There is no question about it. I think a lot of value creation, profitability, etc. Will happen. I think this, transition into clean energy is also, there's no two ways about it, right? It may, it's one of those exponential thing, which may year over year, you may not realize, and suddenly, it just starts to snowball into something very big. I think we're seeing enough and more signs of that. And at some point, regulatory regime will increasingly tilt in favor of that. So overall transition into clean economy is going to be another very big space. I deeply believe healthcare will also go through massive transformation. I think, if anything, pandemic has accelerated, people's awareness, as the pandemic subsides. In general, people's desire to stay healthy and invest in whatever it is, whether it's supplements or fitness or other, regular health checkups and so on, and convergence of preventive and curative models. I think we should see a lot of things happening in that space. I'm personally quite excited about this whole idea of continuous education. I think the whole model of, you get educated once in your life and somehow we are relevant for next 60 years is totally busted. And now, the entrepreneurs and startups are starting to take a crack at that. Those models are probably yet to fully emerge, but it's quite integral to, the modern lifestyle and the pace of change that we are all part of. These are some of the top of mind.
Perfect. No, I think those are great sectors. Those are great sectors, Mukesh. Hey, Mukesh, last question. you have been a lifelong student of high performance, and I've also authored your book, No Limits, The Art and Science of High Performance. How do you practice in your day-to-day life, Mukesh, like high performance? Like, tell us, like, how do you do it? How does Mukesh Bansal practice?
I've been pondering over that question for a while. I mean, this, like, whatever, Rajan, what you do, I do, it requires us to somehow, you need to really continuously optimize your performance. So something I've been thinking about, experimenting and so on. And that's what I try to articulate in the book. For me, it was a few simple things, that at least form the foundation, right? First and foremost, I feel you cannot have high performance without good health, right? And that is what has spurred, kind of my journey into good health, because it gives you in some ways professional longevity, right? It gives you the ability to focus, able to deal with the stress, right? Play the long game and so on. So I think for me, health is absolutely foundational. I think this whole idea of, approaching habits, in a very deliberate manner, it's mind-boggling how much of what we do are habits driven. A lot of stuff we do on autopilot. So in some way, creating a distance where you start to become self-aware that these are the habits, which is kind of your current configuration file. And then you depending upon what you're trying to do, you take off some habits, you add some more habits to it, and now the whole habit, behavioral psychology of habit is very well understood. And some of these best-selling books like Atomic Habits, Power Habit, etc., have kind of made the model very, very clear. So applying that, I think, is a big part of unlocking performance. There's some very simple things, just in a business organization, we use things like what is our long-term vision and purpose, and what is my 3-year strategy, and what is my annual plan and quarterly and so on. You can apply a lot to personal productivity also. Sometimes so as a combination of these things, Rajan, it's is the crux. There are a lot of tools and hacks, etc. that I try to talk about, but it's a work in progress. My LinkedIn profile now says work in progress. So I think I really believe it's something you have to continuously tinker with.
There you go. I like that. So on that note, Mr. Mukesh Bansal, still very much work in process. Many companies later, many innovations later. But thank you, Mukesh, for everything that you've done for the Indian internet ecosystem. We just can't wait to see what you're going to do with the team at Tata on bringing Tata Digital to all of India. So thank you, Mukesh, for joining.
Thank you, Rajan. Really enjoy the conversation. Thank you. See you.
Hi, everyone. It's time to welcome our third amazing founder, Suchita Salvan, who's the co-founder and CEO of Little Black Book. If you're actually into finding interesting products, or you're an internet entrepreneur in India, you have heard of Little Black Book. It's one of the most interesting companies in India. Now, Suchita is the quintessential Delhi millennial who started this business because she was looking to discover her city. She might be running this incredible company called Little Black Book today, but it didn't start there at all. She's going to tell us about her story. But it really began as a Tumblr blog, documenting interesting places she discovered in Delhi. There's been several pivots. The company was founded in 2015. We are now in year 7, and she's going to talk a little bit about how the business has evolved. So let us all now welcome Suchita.
Great to be here, Rajan. Thanks a lot for having me.
Thank you, Suchita, for joining us. All right, Suchita, let's now get into the questions. Look, you've had a really superbly interesting personal journey. Tell us how you got started and how you got to this stage. I mentioned a little bit of it of your intro, but maybe even before that, maybe for those folks who don't know Little Black Book or haven't used it, maybe you can start. Just tell us a little bit about what is Little Black Book today, and then tell us about your personal journey.
For sure. So LBB essentially in a nutshell is we're a discovery-led platform to find and shop from India's unique independent brands and businesses. We exist both as an information as well as a product or a brand marketplace. And we have about 4 million millennials who use our webinar app platforms. We reach about 50 million millennials additionally every month through our social media presence. You can browse through recommendations of over 60,000 emerging brands and businesses on our products and shop about 4,000 of them through our webinar app as well. So that's just a little bit, about LBB. So why I actually got started was, it genuinely came from a curiosity of the long tail of local. I was this, very like excited, BBC marketing like employee, working 9 to 8 and really spending my weekends on seeing, what does Delhi really have to offer. And I think one, obviously hindsight is 2020, and I can make it sound as if all the dots joined very conveniently. But I think the one thing that I found was, India's backbone really is small businesses. And when you deep dive into that backbone, a lot of what you see is there's this massive long tail of small and emerging brands, specifically within lifestyle as a category, that have beautiful products, but they just don't hit page 1 of Google, right? Or, you have to spend copious amounts of money on Facebook or Instagram to drive discovery. So the real goal on day 1 was, how do you really democratize, discovery for up and coming brands and make it easy for, millennials who want new things, who want to discover all that's interesting and all that's fascinating, and just make the two worlds of merchants as well as, young users collide.
Hey, terrific. So, Suchitra, at Sequoia and at Surge, right, we tell all our early stage companies, iterate and pivot till you get to product market fit. LBB has done this really well, right? I don't know how many times you pivoted, but you clearly pivoted quite a bit. Tell us about what's most important, especially for those early stage founders that are listening in, for companies to get to PMF. What would what is most important? Because you've done it several times now.
Yeah. So I don't think our pivots have been, we were selling X and then we went to B2B and, totally changed our face around. So I don't think I think our pivots have actually been an extension of trying to solve the problem in much more interesting ways as more data points of consumers have become apparent, and also adapting to an ever-changing environment, right? If we had to launch a marketplace in 2015, back when, it was impossible to even track deliveries. ShipRocket wasn't the beast that it is today, neither was Expressbees. Instagram was an up-and-coming platform. I remember we guys were one of the first business accounts that was on Instagram. None of what we're building today would have been possible. So I won't look at our journey as, pivots as much as you need to be very committed to what's the problem statement that I want to solve, what's the market that I'm going after, and what realities are unearthing themselves as I'm, solving these problems better. I know it's contrary to say, but I think PMF generally is a little over-indexed, especially for early stage companies. And I'll tell you why. I think companies earlier on very rarely know what their product actually is, right? So for example, when we started, right, LBB started out as a Tumblr blog, then we got a website, we then got an app. If I had to ask you what is LBB's product, you'd say, oh, your app is your product. But the truth is actually LBB's product was a great recommendation. It was trustworthy information about, brands or businesses or products that were being recommended on our platform. So I think sometimes, especially earlier on, founders take the definition of product as what is the interface in between me and my customer or consumer. But I think step number 1 for any founder should actually be really think through what is your product. Is your product your selection? Is it, your logistics? So for example, like, Amazon's product again could be its website and its app, but really where does all of their investment go? It is in making sure that products reach quicker, faster, better, cheaper than, any other marketplace or any other platform on the planet, right? So I think in earlier stages, it's extremely important to be very clear about what your product is and don't get too bogged down by the technical side of what your product may be, but really think through, what is the thing that the consumer or your customer is actually coming to you for. And I think because, you're in your early stages, you're still figuring out what your product is, finding fitment becomes tough, right? Because it takes a little bit of time for you to see what is the thing that consumers, customers, merchants, whatever are coming to me for. But to more specifically answer your question, I think in your journey of getting to PMF or figuring out what your product is, step number 1 is spend a lot of time on what your market is. Where is it? Who is it? How big is it? How small is it? What are the current incumbents within that space? And I think I wish one thing that we had done much better was just spend a lot of time on our market. I think when we were starting out, we focused too much on our market from the consumer side, but we didn't think about our market enough on the merchant side. So that's one. I think the second thing is put numbers behind your instinct. It's very easy to start out saying that, oh, I'm going to build this and this is the impact that it's going to have. But you need to be able to quantify what you're doing and what you're building. And sometimes it may take, tying up with like a Redseer or whoever else to do a little bit of digging around for you. Sometimes it may take going through multiple PwC and Goldman Sachs reports to get down to exactly the size of that market. But you need to be able to define it and don't come up with some ridiculous number like I'm going after $100 billion opportunity, right? Because who are you really kidding? And I think the third and the fourth thing over here is agility, right? So agility on both the people who you hire and agility also on your hypothesis. So once you figure out your market, you've got some numbers behind it. The numbers don't sound ridiculous and absolutely absurd. Test the living daylights out of your hypothesis, right? And I think it's a combination of these four things which can get you to then identifying, okay, what is my product? And is this product the best suited for the market that I'm, choosing to problem solve for?
Terrific. Yeah, those are some really, really good thoughts on that early stage founders can apply. Let's now move to e-commerce, the space that you're in. E-commerce in India is hyper competitive, right? But is also seeing massive amounts of innovation on every front. Every month there seems to be an interesting e-commerce company that comes along. Play the long game is what you describe as your motto for 2022. How do you keep your eye on the long game, in such an incredibly competitive, noisy sort of market? So tell us a little bit more about that.
So, and I think this is what I find fascinating, because I don't know why people still think e-commerce is a winner-take-all market, especially after you've seen what Nykaa has done on public markets, what, Zomato's been able to deliver on. You look at the likes of Purple, Sequoia company, in fact, which is doing a tremendous job despite Nykaa being there. And you also look at the success of Lenskart, Licious, Big Basket, and many, many, many more, right? I think if there's one thing that is apparent is, sure, one may be a 100 billion opportunity and the other may be a 20 billion opportunity, but like, that's a lot of billions to play around with, right? So, and I think that's one. And I think the second is, and this we've learned from Licious, where every category actually requires a very different type of problem solving, which, Nykaa was able to do with beauty through their heavy focus on like content, influencers, unique selection, plus Licious was really able to do through, thinking about cold storage more than anyone else on the planet. And you've, of course, got other examples play out. So I think the first most apparent thing to give cognizance to is e-com is not a winner takes all opportunity. And there's a lot that is yet to really come online. And I think the second thing, when I look at it in the context of LVB, for example, our top categories are largely lifestyle categories where there is a large long tail. So, for example, one of the best performing categories from an e-com perspective is home and kitchen. And if you look at home and kitchen, it's a category that has very few branded brands that are at a large scale. So has its own nuances around, where products are made, manufactured, design, etc., etc. So I think if you take a category first approach on how you problem solve and then get all parts of your organization, whether it's, logistics, customer support, the way you think about your content strategy, customer acquisition, etc., around that category, I think that's really what compounds over a period of time. So, for example, for us, our ability to really generate the kind of content that we're able to show product reviews of products at a scale better than, other competitors for whom home and kitchen may be a feature, but is not, necessarily a key category. That's led to the kind of growth that we've been able to see. And I think, finally, e-com may be hyper competitive, but I think what's great is consumers are constantly changing the way they are constantly changing, one, what they want, and second is are constantly even adapting to newer ways to shop and buy, right? And you've seen that in the US with the success of platforms like Depop, Poshmark, and many, many more. So lots to sort of unpack there, but in summary, I think category matters. How you sell that category and problem solve operationally around that category matters. And I mean, data has shown, man, that e-commerce is not a zero-sum game. And if I can even have 10 billion of the 100 billion, I'm in a good place, right?
Absolutely. And I think you raise a really great point, Susita, which is, if you had asked me even in 2016 or 17, Flipkart, Amazon, that was all playing out. Walmart was going to spend $20 billion to buy Flipkart. Each of those companies was using billions of dollars per year. Can there be more, here? And I would have said, wow, it's hard to see how anybody can carve out, a space, right? And then, as you said, in space of vertical after vertical, consumer segment after consumer segment, right? Whether it's beauty with Nykaa and Purple, or whether it's Licious and Fresh to Home in sort of meats and fresh foods, or even beyond the first 100 million users, right? With Dealshare, Meesho, companies like this are beginning to see it. I think it's a great point. Now when it comes to Little Black Book, LBB has had many unique insights about what millennials really want. How they shop, what they look for, etc. So, tell us more. What do Indian millennials really want, and specifically, maybe and put it in context of what you guys are trying to do at Little Black Book.
So I think one big insight that LBB was even built on was that the Indian millennial specifically is, what we call is looking to signal, but in an accelerated manner. So this millennial is not looking to buy a car or a house, as may have happened, for example, in my parents' generation, to signal that they've made it, or have taken a shit ton of loans. But really what this millennial is looking for is what are the quickest, fastest, and most effective ways in which I can show that I'm climbing up the so-called ladder, right? And there's another term, which we haven't come up with, but there's this term called premium mediocre, which really is that
premium mediocre. I've never heard that word before. What does premium mediocre mean?
So premium mediocre basically means that it's not like the consumption of this customer has changed. It's just they are leveling up the brands that they consume from, right? So, for example, take the example of Mamaearth. It's not like the customers buying some, absurd thing that was never being sold before. They're still buying cream, face wash, hair oil, etc., etc. But they're leveling up by paying that slight premium of 10 to 25% more than the next best option that they have, that they may have grown up with. And what this basically means, in our context, is that this customer is actually still very price conscious. So this customer is not someone who will, pay triple the price of the next best alternative just because they want to signal. So they want products that help them signal that, I'm cool, I'm with it, I, have access to all that's new and interesting. And they're willing to pay a premium for it, but that premium is minuscule. It's not double, triple. It'll be like a 10 to 25% more than the next best alternative. And it's actually in that slight delta where we see the best type of brands being built, right? Mamaearth being one. I don't know why I'm only naming Sequoia companies, but a Heads Up for Tails, for example, being another. So I think that's one big thing that we see. And for example, even when we onboard brands or merchants on LBB, even we have strict price parameters. So, we're not an aggregator. We don't onboard anyone and everyone. Even we look at price parameters of in between 500 to 1500 rupees in certain categories and onboard brands accordingly. So I think that's one. Accelerated signaling is one big feature for millennials. I think more specifically from a category perspective, I'm not saying this just because it's a category that performs well on LBB, but I think home is going to be a big category. You already see tailwinds thanks to IKEA coming into India, H&M launching home, bunch of sort of, companies which may have certain categories within their portfolio expanding into home as a segment. And obviously COVID has induced an interest in all things space, right? And the space that you live in. And I think the third nuance that we've definitely seen come up in the past, 18 odd months is this obsession with flexibility. For example, flexibility of ownership, flexibility to change, flexibility to try and test things out, flexibility to not plan. And we see brands and companies that actually give, millennials an opportunity to try things out, or at least give millennials an opportunity around flexibility of purchase, which, on the finance side, you're now seeing happen through BNPL, but another example, for instance, at our end could be, things that we've done internally to create more sampling opportunities, for instance. So sample a product before you buy it, right? Or try a product before you buy it. We're seeing those come out as interesting features. So accelerating signaling, premium mediocre, home and kitchen, flexibility, those are at least the top 5 that we look at in the past 18 months.
That's great, Sushita. So, those of you that are listening that want to try to understand millennials more, now you know who to go to. Okay, last question, Sushita, before we wrap up. This is a topic that I know you're very passionate about. I'm very passionate about. Diversity in India's startup ecosystem has a very, very long way to go. What do you think? What more do you think needs to be done? And be candid. I know you always are on this topic.
I like, and I don't mean to sound like unnecessarily controversial, but I think at the end of the day, if founders want growth, companies will grow. If founders want profits, companies will see profits. I think the biggest problem right now is not enough people want diversity, right? Not enough people care enough about seeing enough female representation, whether it's at their CXO levels or just within their teams. And I think if we genuinely have to solve the problem of diversity, specifically just within the startup ecosystem, somewhere there has to be an incentive creation for how do you get founders to take this seriously. Because if they don't, it's going to percolate to the rest of the organization, right? So if you're working at a company where you don't see enough representation, not just vis-a-vis female, but just folks from different walks of life, somewhere you need to scratch your head and ask yourself, is this something that my founder cares enough about? And if they don't, let's figure out a way to get founders to care, right? Because we've seen that happen time and time and again. But I think the things that I'd bet on more than, for example, female founders, is how do you just get more women to work, right? How do you get more women to work in companies? How do you create cultures where there is an opportunity for there to be some amount of flexibility, which I think has now happened thanks to hybrid work and, COVID and this, that, and the other. But the TLDR of this is somewhere incentive creation for founders has to happen. I care about it because, not just because I'm female, but because, for me, it's extremely important to create enough shots on goal for everyone to have enough shots on goal. But, we need more founders to care, and caring goes a long way.
Terrific. No, I think we'll end on that note, Sushita. Founders must care. It has to be a priority. Otherwise, this is not going to happen. And you're absolutely right. This is about women in the workforce much more. It's a much broader topic than just female founders in the ecosystem. So thank you very much for your time. Very exciting to hear about what you're building at Little Black Book. And can't wait to try out these, sort of super interesting home products from Little Black Book.
Lovely. Thank you, Rajan. Thanks a lot.
Okay, with that, it's time to wrap up our sort of quick chats with three extraordinary founders: Salvan from Little Black Book, Mukesh Bansal from KyoFit, and also the president of Tata Digital, and Girish, who's the CEO of India's most admired SaaS company right now, Freshworks. I hope all of you were able to take some key learnings away from that. And let me now hand it back to our MC.
Thank you, Rajan. The last snippet there about what do leaders really want, and they will drive what they want in terms of inclusion. What an enthralling session. Thank you, Rajan and speakers, once again. It has taught some of us that the grass is always greener on the other side. So while from the outside, it may look like textbook execution, it's important that all startup founders realize that the kitchen's always messy from the inside. So it's important to build relationships and play to each other's strengths. This brings us to the end of our morning episode.